How to analyze your market. So first of all, you should make your charts very simple. This is gold on daily time frame. You can see this is gold on daily time frame. Okay, let me just remove this. Let me start from beginning and show you how it's been done. I'm removing everything on my analysis so that I can show you how to start. This is your charts. So first of all, when you want to make your analysis, let me use gold. I'm using gold and this is daily time frame. Okay, so first of all, you identify the structure of the market. Where is the market going to? As you can see, the market came from down here and moved up. So when it's reached this place, it's rejected. So what we call this is a wick or a candle rejection. You can see that tiny stuff. Let me zoom it in so that you can understand what I'm saying. Can you see that? See that tiny wick? This tiny wick here. So this is called a candle wick or a rejection. Okay, let me make it easier so that you can understand what I'm saying. So I'm drawing a circle here so that you can understand what I'm saying. So you see this circle that I've drawn? This circle is showing you the candle wick that was rejected, and the candle wick here is the red candle, which signals the sellers. That is the bearish candle. So let me remove this circle so that we continue our analysis. Okay, so let's go. First of all, before you trade this kind of market, you identify the structure of the market, the structure of the trend. Before you do anything on this chart, the first thing you should bring on your chart is the trend line, so that you know where the market is going to. Is it going up or is it coming down? Is it buying or is it selling? So you get your trend line to help you understand where the market is going to. So let me draw the trend line here. Okay, here, let me make it easier for you to understand. So now you see where the market came from. You see? So I've drawn my trend line, and as you are drawing your trend line, make sure it did not pass through any candle. Let it not pass through any candle. Make sure it is touching the wick. At least 2 wicks is enough. If it can touch 2 wicks, then it's enough. Okay, I want to align the trend line very well. So this is the first trend line. To do your analysis on this particular chart now, you have gotten the trend of the market with this particular trend line, okay, showing you that the market was bullish to the upside until it got to this place and rejected. You see the 2 rejection here. This is called the candle wick. Let me expand it a little bit so that you can understand. This is called the candle wick, or you call it pin. Some people call it pin. So here you mount your supply, because this is where the sellers became stronger and then they started pushing the market downwards. That zone is called the resistance zone. So you put you put any shape, something that can help you determine understand that place is the resistance zone. Me, I make use of the rectangle shape. Okay, this is a resistance zone for me. And next thing is to look for the support zone, because obviously when you have a resistance, the market should be looking forward to a support zone. So first of all, we have determined that this is the resistance zone of this particular market. Now, the market went from here downwards and it's continued downwards. You can see the market continued downwards. So what actually happened here is that the bullish trend failed. It failed here, and it failed at a price of 5,623 $5,623. The market failed at a resistance zone. This is the resistance zone. So at this point where the market started trending down is called the neckline. That zone is called the neckline. But I'm going to use this same rectangle block to show you the neckline. This neckline will serve as our support zone as well. A bullish market is a market that has series of higher high, higher lows, higher high, higher lows, higher high, higher lows. I don't know if you guys understand what I mean by higher high, higher lows. Let me show you what I mean by higher high, higher lows. So this market is a bullish market that has a series of higher highs, higher lows, higher high. Okay, this should be the higher high here. Higher high, higher low. You see? Now, instead of making a new higher high, you can see, instead of it making a new higher high, it rejected here and then started coming downwards. You see this point at which it broke this former higher low. At this stage where it broke the former higher low, you see this place? This is called the neckline. This is called the neckline. So it broke this particular higher low, went downwards, came back to retest it. Let me show you. Then it came back to retest it and then started going down. Continue going downwards. You see? So this is, I'm just using this particular arrow to explain what I'm saying about the bullish trend. So that is the neckline. Okay, so let me use this block here to identify it so that it will be easier for us to understand. Okay, let me reshape it. You see there. So that is it. So this is the neckline. This is the neckline. Let me make the neckline thicker in color so that it can be easy to spot. Easy spot right there. So can you see that? So let me remove this one because I don't like my charts to be too crowded. Okay. So now you see we have the neckline here. So this is called the neckline of this particular trend, this bullish trend. Here is the neckline. And obviously, the market has traded below the neckline, showing you that this trend has already changed from being bullish to becoming bearish. The market is going downwards on gold. Look at what I'm saying. You see, the market has trended from here down here, forming new lower low. This is a new lower high, then a new lower low, and it's still going down. It's still going down. Let me make this easy so that you can understand it. You see, the market is going downwards. You can see that. So now, this particular chart has changed from being bullish to becoming bearish. The movement of the market is now going downwards. Okay, so what we should be looking at now is, for me, I go to the lower time frame. Let me remove this arrow so that you can understand me. Currently, we are on daily time frame. You can see there, we're on daily time frame. So I go down to the lower time frame, which is the 4 hours. So looking at the 4 hours, you can understand what is actually playing out. You can understand it clearly. You see this place? This place, some people call it double bottom, but me, I have my own way of understanding forex trading. I don't think I share the same view with a lot of people. I understand my own differently. Everyone has a different way they understood forex market, and everyone has terminologies they use on their charts or on forex generally. So we are still trying to get an entry, okay, to know where we are going to enter a trade. That is what I mean by entry. So now we are on 4 hour time frame. We already identified that this market is going downwards. That is bearish trend. So we don't need our trend line here. So we just place our rectangle block. We look for our rectangle block. To help us get the resistance zone and the support zone. Currently we have the support zone here. You see, here's the support zone. And here is a resistance zone on the lower time frame. Okay, on the lower time frame. Make your chart simple. Make your chart simple to understand. That's the most important thing. Don't go and be drawing so many things on your chart, putting so many indicators. No, make it simple. You see how simple this is? Now we have our resistance zone. This is a resistance zone. Okay, this is a resistance zone, and this is our support zone. Now obviously we have cut this market in a range. Okay, so the next thing we should be looking out for is it going to be a sell from here downwards, or should we wait for the market to come down here, somewhere here to the support so that we can buy? So what exactly are we looking out for now? Is it a sell or is it a buy? Is it a sell or is it a buy? So are we going to sell this market from here downwards? Or are we going to wait for this market to come down here, from here down here, and then we buy? You see what I'm saying? You see what I'm saying? So now this is where liquidity comes in. This is where you understand liquidity. How does liquidity work in terms of trading? Remember, we're still on 4 hour time frame. We are still on 4-hour time frame. And dollar is, let's check dollar and know if dollar is strong. So I make use of TVC in terms of dollar chart. Okay, you can see obviously that the dollar is